What's good, family? So I want to show you exactly how I know getting into the markets, how I'm trading this. You know what? I had a beautiful insight and remembrance of how I got to this point and where I am with this, right? And what I did was actually went back and look at some videos from my old mentor, which is MentFX. If you don't know who that guy is, you need to go and check that out, right? Because that's where a lot of this foundationally is coming from. And then from there, what I'm doing is pretty much spin-offs from what that is into what we currently have now. This is what pretty much birthed Innovate and birthed PRIMORA. This is next level type stuff. You know what I mean? If you familiar with MentFX stuff, it's very simple. He kind of gave me the insight to realize that how the flow of money and markets work, and the fractality of the nature of markets, and how the market mechanics is, right? So what I've derived from that information and that way of viewing the market is what we now call PRIMORA, and how we're using it to get into the markets. So I did a lot of juggling there just a while ago, but just to fix this so you can understand it. So what we have here is our slower MA, which is what we're using to indicate the trend, and then our faster MA, which is what we're using for when price interacts with it. That's when we're looking to get involved in the market. So as you can see, like even in the past, if this is on a weekly as well, so what I'm looking at is the weekly, daily, and hourly right now. And if you see, once it interacts with this MA, the likelihood is that it's continuing to go with that, and that's a clear sign that money, big money, is in the market, right? Very simply put, very easy to understand. Whenever it interacts with it, this is where we want to look for trades. We're not looking for trades in between that. Just keeping it very simple. Right here, we're not looking for trades, nothing. And this is more than likely a time that you'd get stopped out a lot of times if you're trading like the past systems that we used to do, right? Now that it interacted here, this is when you can start to look for some stuff. Go down to the daily, start to look, and you know what I mean? So what I'm trying to do right now is just show you exactly my approach in how I'm getting into the market here. So obviously we know, I'm just going to show you the end result. Obviously we know that this runs and goes crazy, right? So let's just say now, for example, that we are somewhere down in here, and I say, okay, cool, let me just take that off. Let me take all of this off to show you exactly what, because it's repeatable. The beautiful thing about this is that it's repeatable and we understand what we're looking for. So put simply, all I want to see, can I actually do this time now and make it stay? Oh, that's beautiful. So I'm gonna write down the rules and make it very simple. So one, we check on the weekly bias, which is determined by the MA, all right, which is determined by the MA. That's the very first thing that we're looking for. Then after we look on the weekly for the bias, you can obviously translate this to any time frames that you want to, just have them properly spread even, like hourly to a daily to a weekly, or 1 minute to a 15 minute to maybe a 2 hour or a 4 hour, whatever you want to do. It's all the same. So you can look on this as your higher time frame. Then from there now you get down to your daily. Oh, what I should do is actually, yeah, I'll just write it down because this is exactly what the steps are, right? So your weekly bias, you see what it is. Then now I'm gonna write the steps. So your weekly taps fast MA, which would be your MA right here. Weekly taps your fast MA. Scale to middle time frame. Right, you scale down to your middle time frame. This is going to help you guys a lot. Like even with me, this is just beautiful to see. You scale onto your middle time frame, and then from there now, when you scale onto your middle time frame, you wait for the pullback, or you wait for the daily to go back to the same fast MA. You wait for this to repeat, number 2 to repeat. Wait for number 2 to repeat on middle time frame. And then from there, you simply take entry on plots. Take the plots on the ETF, which is your entry time frame. MTF could be a middle time frame. Right, MTF. So weekly bias could be your HTF, so higher time frame, middle time frame, entry time frame, which would be your lowest time frame, or so you can have it where it's LTF, lower time frame. So higher, middle, lower, easy stuff. So I'm going to show you how this works with this. So let's just say we saw gold. This was in October 2023. I'm just showing you exactly what we're looking for, and this is how you get into high probability trades, and this is what we're looking for across all time frames, right? It doesn't matter what the time frame is. This is what we're looking for, and you're looking for that to continue over and over. This is how I would label it. Very simple, right? So I see that price came up. I got my bullish plot on the weekly because that's my weekly bias, MA. I'm above the MAs, and then weekly taps the MA. So once I see it pulling back and I see at worst I get my plot, right? So confluences, what we're doing right now is literally building confluences. Once we're building confluences, in other words, building the story that we want to see, that is how we end up building the right context, building the right story that will carry us to where we really do believe price is going to go next. And more than likely it will go that way once you understand how the mechanics of it works, once you understand like the directions and what happens, what tends to happen beforehand. So your job and your duty is to go and see, okay, what created this move? Okay, well, price moved up, this, that. You formulate your own story, right? And then maybe you even say, okay, how could I have gotten involved? Maybe I wait until I see a huge impulse that clears price, which means there's a lot of money going in. Then I wait for it to come back and pull back, which is exactly what we're doing here. Once it pulls back, this is when I go down in my lower time frames to search for prices to continue in this bigger trend. That's what I'm looking for. When it does the same thing down here, comes down here, taps down here, look for the prices inside to follow the bigger trend, right? So even though we're going to be looking on this right here, more than likely what you wanted to do again, wait till it clears price. Don't worry about it returning. Look for it to clear price, which means clear money is in there pushing. Wait for it to come back to tap your MA, like I just said, tap, and then look for continuations. You literally can walk away from this video right now with that piece of information and do something proper with that. So what we're going to do is label this just like what we did on this right here, so you can see it and understand it. All right, so whenever you see price come and tap, or the weekly chart or your higher time frame chart, and it comes and taps that fast MA, look for where that high just came from. Or even if I inverted this, look at where the low came from, right? So bam, it came up, tapped it right here, that low came from right here. It would be the exact same thing. You can flip it and understand it. So the first time, let's just say it came and tapped right here. This is now where I start my labeling. So I look on that and I say, all right, that's my weekly liquidity target top that I want to see price run on. And remember, I have different time frames that I'm scaling down to. So weekly bias, MA, I'm above, so I know I'm buying. That's already cleared, checked. Weekly taps, fast MA, tapped, clear. What do I do now? Scale down to middle time frame. I go down to my daily. So let me just do the replay right here so I can just speed up the process, because we already obviously know what happens. What this video is meant to do is to show you exactly how to think about getting into the market, right? Using PRIMORA, using market mechanics, understanding how liquidity moves and generates and then moves, right? So you have your weekly liquidity target top. We already have that labeled out, perfectly fine. Now what we're doing, scaling down to the middle time frame. I scale down to the middle time frame. What I can even do is say mark this off, and this is the area that it tapped. I can just do that, very tiny. Why? Because when you get down to the lower time frames, that will get huge. So here we are. This is what happened. We can understand that what scale to the middle time frame. This is where we are right now. This is the weekly high that was created, the weekly liquidity target top that we now know, since the trend is that it's bullish, right? Because we already understand that we're bullish and it came back down, doing the exact same thing on repeat. We want to see price continue to break highs and continue on the bullish side. What do? We look on this, and we can even add another step to say, this one said weekly bias for MA. We can easily say, okay, middle time frame bias, is it above the MA or below? It's above right here. So now we kind of know exactly what it is that we're doing. This, just look on this like you're repeating the exact same building blocks on all time frames, right? Simple as that. So you see this happen. This is on the daily where it came down, tapped in here, and now, on the weekly came down, tapped in to the fast MA, and is now going away from this. This is where now we look to get into the market, scale this down and get into here. As you can literally see, this becomes your weekly liquidity target top. So what you're trying to do, or what you want to do, is see price literally break that, because in a bullish trend, price continuously breaks highs. You obviously understand this. It's not hard to understand. So the hardest part is the discipline to follow the rules. So let's go. You know that you're literally looking to break through highs. What do we see? We see price come back up, close above the MA, which means we're back bullish again from this sell-off, right? Days of selling off. Like if you're on a 1 minute trade, if you're a 1 minute trader, this is like a lot of bearish action, right? So look on this like this, came up, paused right here, as we love to see. We love to see when liquidity target tops are created. So what we can do here is easily say, cool, this is the liquidity target top for the daily chart, right? Because that's obviously what happened. Price came up, paused, left a high up here that needed to be traded through, and this is exactly what happened on the daily. Came up, paused, left a high to be traded through, and that's what we're looking at. That's what we're looking for. So now that is labeled off, I can even just hit the replay again to come down right here, because this is where it went, and then I'm gonna show you some more on this. I don't want to take up too long on this video though, so I can show you exactly now how I would look on this again. So boom, that's the weekly zone. This is now the daily zone, right? So you have options. You can either wait for the daily also to come and tap, you know what I mean? You simple as that. You say, wait for number 2 to repeat on lower time frame. Cool, but that's not the middle time frame. Either way, it's all the same. This is where price came back down to, and I can even try to show you on both sides, right? Where, okay, this one here didn't tap the MAs, and then we can look and see, okay, what if it did tap? What are we looking for then? You know what I mean? To just make it a fully fractal system where it's just repeating one, repeating the other one, repeating the other one, and then we take off. But this is a good way to look at it, because it's never going to happen the same way all the time, right? So you have to be able to look at it and say, okay, this is what it's doing. This is what the tendency is. It can either do this or it can either do that. Now you watch, and then you understand what it is, and then you take action. Simple as that. So now I marked off the low right here that came right here. You wouldn't have known where the low is, but once it created this, you already know that the weekly is already pushing back bullish because it came and tapped. You see the daily come now, and then you literally create a liquidity target top here on the daily. Now you get down to your lower time frame. So wait for number 2 to repeat on this, sure, or not. This is one rule set, or set of rules, and you can also do this and just simply say, wait for that to repeat on lower time frame, or you can simply just say, so weekly bias touch, weekly tops, fast MA, scale down to middle time frame, wait for middle time frame liquidity target, either top or bottom, right? So top or bottom, and then take the plots on the lower time frame. So then now from here, let's go to like number 5, scale to lower time frame. And then take the plots on the lower time frame. You can literally do that, and that would be a 6-step thing on this one and on this one. But be able to move around and be able to maneuver around these type of things, because the market never does the same thing over and over and over again. And if should you had followed only this one now, you would be sitting out of the entire thing for 13 days, right? Versus you following like this one now, just to be able to be flexible and see it. So let's get down to the 1 hour time frame. We're zooming into this. So as you can see what the 1 hour looks like on this, right? And the best thing about this is that you can always look at what happened on the 1 hour, what it should look like when it repeats itself, what it will look like when it repeats itself, so that you can become programmed and follow the exact same thing that you see over and over again, because the market just repeats itself over and over again. So this is that daily zone that came down here and tapped right there. This is that weekly zone that came and tapped in right here. So that's the weekly zone. So that big MA is just going through right there. All right, simple as that. So now the weekly came through here. Now the daily chart is pushing up. Now see, this is why the labeling is necessary. So this is our weekly liquidity target top. That's right up here, that wants to be run through, right, in an already established bullish market, because we see the market push and burst through all of this, proving that it wants to go higher, right? And now what we want to do is ride that wave to go higher. We already know where this thing goes, so let's see how we would get involved, right? Simple as this. So remember now, daily chart pushing up, and then the daily chart started to come down here and created its own liquidity target top on the daily chart, which is that right there. That wants to do what? Just like on the weekly, get ran through. You understand? Very simple. So all we do now is repeat the exact same process. This is on the weekly liquidity target top. Now we have a daily. So you see the fractal nature of this. You see the fractal nature. This dip right here to then push out. Then this dip right here to then push out. Yeah. Simple as that. Because here's the beautiful thing. We can even scale down one more time frame if you wanted to, like go down to the 5 minute and see the exact same thing, or the 10 second, or the, you know what I mean? Anyways, so here's the plot. As soon as it came down and came down here, this one here came up with a plot, but guess what? Never did validate. Beautiful. Then this one here came with a plot and stayed above the MAs, validated. We can take this one. This is the one now that literally runs and never returns. So now we can talk about trade management now too, because when I was watching Ment Effects, like even last night, and just looking at it, because of course you can never stop learning, and it would be kind of retarded for you to think, oh yeah, well I'm here now, so there's no need for me to learn anything else. No, don't do that to yourself. Don't make ego drown you out. Be wise. You know what I mean? So I started to study again, just make sure say catching on to the right things, because that's a guy that's always evolving as well too, and I definitely am evolving within myself and my own system and how I'm trading this. So look at this, bam, a 1 to 28. More than likely we probably wouldn't have gone to the 1 to 28 fully, because it would have taken probably a partial somewhere. So how he does it is like, from the price moves up here and then moves away, he goes break even very early. So him going break even very early, he has a high break even rate, right? I don't necessarily break even like that, so my management can be slightly different. I'll go break even at like a 1 to 1 or like a 1 to 2, and then go break even, and then I'll take a partial after. Like for me personally, I'll take a partial after I see it go and break like highs and it comes back down. So let's just say my stop loss will actually be like this. If I go stop loss, let's say that kind of, I don't like that. Well, I can do it like this, yes. So stop loss, and I'll just do it white. All right. So this is how I would actually look on this. Or do I have one here? I think I have one here as a stop loss. Yeah, there you go. Cool. I'd rather use this. So like my very first push, and then it came back down and then created a structure right there. I would have went, and once it broke this, going back higher, I would have put my stop loss under here. And that's where I'd probably start to take my first partial, right? If it comes back and tops that, doesn't, creates another low, and then trades right through that. So I put my stop loss right here to take a partial if it hits that, and then no, it doesn't, come down right here, and then trades through that right there. So I move my stop loss right here. Simple as that. And then I just repeat the same process. Comes down right here, and then breaks this right here. So my stop loss would have been right here. And then now when it came in top, that's when I would take my first partial. So that first partial now, instead of 1 to 28, my first partial would have been 50% at 9.95. All right. Hi, baby. Daddy doing a video, okay? Go ahead and run. Good boy. So that would have been that partial at 9.95. Divide that by 2. That's almost a 1 to 10. Let's just call it a 10. So I'd take off 5 right there. And from there, I leave in the rest to run and watching it daily. That's just how I want to do it. Right? So let's say we took off half of it already, which is a 10. So we took off 1 to 5. We took off 5. And now that ran, let's just say a max potential right there, just on this example, on 1 to 28. Divide that by 2. That's 14. 14 plus the 5 that we left with, we would have walked away with 19. All right, simple as that. And that's how I would have been looking at the market. That's like the very simplest way for me to explain this with you now, instead of me going long-winded, because my videos tend to be long, yes. So but it's very informative, right? So repeat this whole thing, repeat that process, look at this and then look at this, and you can see the differences. Let's see now what would have happened if I had went and did wait. So now if I waited for the daily now to come and tap, what that would look like before looking for it, because remember the weekly already tapped and we're looking for it to continue. So now what this does now automatically is leave a daily up here that wants to be run on, as we can already see, right? That already leaves a daily that wants to be run on. So now so daily taps right there, but then comes down and closes, right? So that's kind of heavy. If you want, this is where you can start to go down into the 1 hour to start to look for trades. So automatically what we're looking for is for this to come back up, make a bullish push, maybe have a very big push, and then that would kind of tell us what we're looking for. Easily now you can just go on the daily again. So let's see, boom, came back. This is where it topped. So now we can start to look for 1 hour trades to go on. Yes, this is just me reaffirming and confirming what I'm looking at. All right. And then from here, we just boom. So that's the same big push that we're talking about. So what I would want to wait for now, like another solidifying way, is for this to come down, go below the MA right here. And then once I see it go back up and create a plot, I'll take that one. This one is almost like a psych out, right? A psych out. So immediately you'd have seen that we would have taken a loss right there. So instead of doing that, price has to pull back somehow to create the structure, as you see, structure, right? So let's wait for these moments. And how we prove to ourselves that these structures are done and then they're ready to move again. They'll do something like this. So it'll be something like this. They'll do something like this. You see a power push, and then you see the pullback, and then you see the continuation to do what? Take this high out and reach for highs like this, only to repeat itself once again. Big push, if it's gonna continue in the bullish momentum, and just do stuff like this. So this is how you'd look on it, like from a 1 hour time frame, and this is like on the daily time frame. You get me? Very simple stuff. And that's how you look on this. So what we're looking at right here right now is a possible, sorry, let me pull this back. What we're looking at with this push right here possibly is this push right here, or this push right here in an already established bullish market. Remember, we just got into this trade down in here, which ran all the way up here, and it's already bullish. So what we're looking for again, see, push. Hey, see the heavy push here? This is the push. That is the push. You see the pullback? That is the pullback. And you see the small but heavy push inside here? This is what that is. You see that? And then you just continuing to push. That's what that is. That's what that is. And what we're hoping now is that this is the exact same thing that's going to happen right here, going for this high right here. So liquidity target top on the daily. We can obviously go on the weekly and look on that as well. So again, if I'm already bullish and I'm looking on this like that, then I just want to see it follow through. This is where now I can introduce something like this. All right, so I see in the daily chart, the 1 hour chart, the weekly chart. Let me see if this is supposed to be the weekly. So the weekly, right? This is so that we can see what we're looking at. As you can see, so this is where it tapped. This is where it tapped. And on the hourly, this is where it tapped. And then this is where we got our entry to continue going up. As you can see, the daily pushing going up. Weekly already going up. So, yeah, so just to continue on that, so see the daily tap. Let's just see what would happen if we followed this one right here. This one we already know checks out. I can just leave that there. Building confluences. This is just what it is. Sorry, I kind of like that being there. Let's just make them way smaller so that we can keep them on screen. Let's just keep them on screen so we can actually use them. All right, and then we should be good to go from there. So this is the one that we're using right now. Let's just leave this one right here. So boom, the daily tapped in, and now the 1 hour came up. So remember, wait for number 2 to repeat on lower time frame. So weekly taps, bam, 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 wait for number 2. So now we're waiting on the 1 hour to tap. All right, based on this, waiting on the 1 hour to tap. Remember, so our daily is already bullish going, and then our weekly is already bullish in an already established bullish market. So let's look. We're looking at the hourly right here now. Bam. Where do we tap? When do we tap? So we got tapped in right there, right? So now if we get a push literally like this, if we get a push like this and comes back down, where I'm ready to take that trade right through here, right? Let's just see what it does. We don't get one right there. It fails down. It fails down right there, and that's it. So let's just see what else we get, because see the daily is still bullish from right here. So what we want is for the daily, we hourly to come up here above the MAs, and then they'll give us our entry. And I'm definitely willing to take that, because what we have right here now established is our liquidity target top on the hourly. So liquidity target top, hourly. And what does that want to do? Get ran on. Simple. All right. You can even just do this, because I used to do this as well. Liquidity target top. That wants to be run on, right? But just for clarity, we can even just have that off like that. So what we're doing, we're waiting for that big push. See, that's the push. Similarly, because remember it's fractal, so I'm willing to take through this high right here. I'm willing to take a trade through that high. Let's just see if it gets tapped, and let's see if we get tapped into that trade. Still good to go. Here we go. And then that gets tapped into. So we could have obviously taken this one right here too. We could have taken this one. And actually this is one that I definitely would have taken, because guess what? It meets the criteria. Take the plots on the lower time frame. That's the plot. That's also a plot. So you could have been into 2 trades on this. So that's the first trade. Right there, stop loss right there. 1 to 1, I would have already been break even on this. At break even on this, it would have already ran to 1 to 3. I'm just showing you. And then the second trade would have been this right here, where it tapped that. Stop loss can be right underneath here. Yes. Okay. All right. Yeah. Yeah. Go ahead. Oh, actually, no, it's not the weekend. No game right now. So this pushes through, right? Very simply put. And then this one so far is going sweet. So now again, if it creates the high, so let's just manage the trades, right? Because this is exactly how we would have been into this one right here. This one right here checks out. We got that one 1 to 28. Now let's check out this one right here and see what we would have gotten with this. So now if it passes through here at the top, I'm going to put the stop loss. So like bam, stop loss under there. And let's see what would, but both of them are pretty much break even right now. Well, 1 to 1. Wow. So it just hit 1 to 1. So this one is at BE right now. Let's just say this is BE. Break even, 1 to 1 BE. And this one is definitely already BE. Yeah, this one is already BE. So let's just see how it works out, if it does. So that one gets stopped out at break even easily. Or both of them get stopped out at break even. There you go. So that's just what that would have been. And that's perfectly fine. You understand? That's perfectly fine. Max potential for this one was a 1 to 1. Max potential for this one was a 1 to 3.45. Simple as that. And from here now, obviously you just repeat your rules. What does this do? Where are you now in the daily? What are you doing in the weekly? Weekly is still bullish no matter what. Daily is still bullish, you can see that. And then on your hourly now, guess what you just did? Tapped into here again. So if you get another one, if you get another push like this, bam, sorry, excuse, and then a push like that, you can definitely take one through here. All right, you can do that. That's just how we can look on that. See, almost, but that didn't work. Let's just see. We're looking for a push out of here. That's definitely one. That's one. So you can definitely take this one through here if you wanted to, but guess what? It closed below there. So nothing to do. Nothing to do. This is where it now gets sweet. Okay, cool. So now if we get through here, then we can take that one. And this is a good push, right? So you can see it. And on the daily, you can see it. On the hourly, you can see it. This is exactly how I would look at this for myself. So let's just see if we even get activated in that trade. Almost. We're pretty much going to get there. Yep. So we get in on this one. Stop loss goes below this candle because this is all inside price action. So of course I can put it right here, but I'd rather save it through that and go for a 1 to 1. This is the last example before I end the video. So let's just say that was a 1 to 1. Let's see if we get to break even. Maybe we do, maybe we don't. So there you go, we get to break even. And also I can put that stop loss right there. But the reason why this even worked is because, remember, we following the trend, we following the rules. You can see the 2 sets of rules right here. And remember, you can change it up. So if I saw something like this, I would definitely follow it. And if I saw something like this, where the daily came down and tapped it, I wait for the daily to tap. I can also follow that as well. But the whole point is, I already know that from the weekly tapped right here and it continued, I'm bullish. I don't need to look for sells. I don't need to look for a sell. Let me see if I'm still recording. Yeah. So I don't need to look for a sell opportunity because I know exactly what I'm looking for. All right. So now we're break even on this. We already know that we're break even. Oh, sorry. So I already know that I'm break even. About right there. All right. So I'm chilling on this trade right now. Let's just see how we can manage this. All right. Let's see if it passes through the top, then we get to move our stop loss out a little bit higher. Okay, cool, nothing. Now we did this. Of course, this would have been like one that you probably could have taken, but the daily didn't come down and tap. Neither did the daily provide a proper opportunity. Maybe this right here in here, yes. Yeah, so maybe you could have taken this. You would have taken an immediate loss. But you're in on this one. So whatever. So let's just say you took a loss right there. Just for example's sake, because this is real. You will lose trades, right? But this is a very good video so far though. So just to show you like the potentiality of this. So right now that moves from break even to the break even stays right there. What we're doing now is just creating where we want our stop loss to be to take our first partial. So boom. Oh, actually I have it labeled, so I can take a partial there. So boom, if it taps that, I take a partial. So right now that's what it did. Right now if it passes this, then I put it under here. Let's see. Good. So now I can take a partial right here if it passes. And let's just see right now if it passes here, if it passes through there, I'm going to put it up to there. No. Cool. So I take a partial right here so far, 50%. So I take off 1.03. So 50% from there, 1.03. And again, I just leave the daily to run and to see how well it does. If anything, you know, I can do whatever. So I take that partial right there, and right now I just let the rest run. It's already at BE right here, remember? So no risk, and we already took off 50%, which is 1.03. So now we just leave that, and cool, we get stopped out BE. Well, not BE, but stopped out at 1.03, which is still a one whatever gain. And of course the max potential of this went to 1 to 2.94. But the whole point is, guess what? The daily hasn't moved anywhere yet. The weekly hasn't moved anywhere yet. And you already know where this thing goes. So you can imagine one of these trades will definitely get you in and not stopped out. That runs continuously forevermore in that sense. So if I get out of replay mode, let's just look at where it would have been. So as you can see, the weekly would have just been crazy bullish. The daily would have been crazy bullish as well. This is where we were just about to get in. Or we did this one. Cool. So it would have been a lot of playing around in here. And since the daily would have closed under here, we wouldn't have been looking for any trades, really and truly. Maybe, maybe not. It all depends on how we see like how will it start to look. Yeah, that's too much for me to scroll down there. Yeah, but as you can see, let's just say somewhere else where the daily taps. As you can see, the daily taps right here, which is actually the very place where we got Annovate created, which is right in here. We got Annovate created roughly around right in here. And then from here, I just been showing everybody why we still bullish. From down in here actually. January 9th was my birthday, so right here is when I told everybody that we were still bullish before we even got this plot. And then from here to continue, the daily tapped right here, the daily came down, tapped right here. The fact that the daily taps this MA, you know that the weekly taps the fast MA. That's what's cool about this. Remember, building confluences. So when I know the price comes and taps this MA right here, I know for a fact the weekly is tapped right there. So that's how I can even just, if I want to, skip the weekly and just know that this just got tapped. And what am I doing? I'm looking for my bullish plots or price to come up and then come and tap this. This one here came straight back down, so I probably would have just waited, because if it's going to be bullish, it's going to be bullish. It's going to go up and then I'll barely tap the MA like this. This one tapped, kind of came down, but then now you see the bullish pressure coming back up. You know you're good to go. This one here tapped but didn't even close. You see, it came up, tapped, then went off. This one here tapped and then went off, you know, just like in this one here. Came up, tapped, came down a little bit and closed, yes, but then went off. Tapped, came down, closed, but then went off. This one here tapped, did not close or anything, went off. Tapped, went off. So we know the tendencies. When you know the tendencies, you know what to look out for, right? And remember, this is happening on all time frames. This could have been the 1 minute, this could have been the 15 minute, this could have been the 2 hour or 4 hour. It does not matter. It's all the same, all right? Yeah, cool. So this one right here tapped. You could have been looking on the 1 hour for these trades. Look on this. So you see, tapped, came up, and then once it came up, probably wouldn't have been in this one yet. Why? Because here's so many ways to protect yourself. The MA hasn't even crossed up here yet. So this one that you probably would have taken, you just wouldn't, because the MAs haven't even crossed. So you're not in a bullish environment, right? And all of these that came and tapped, you wouldn't have been involved because you didn't get any plots. This one plot came, you didn't get in. This is the only one that you got into right here. And guess what? You would have waited. Why? Because guess what? Oh, well, no, you wouldn't have waited. This would have been the first L, first and only L right there. And then this one came. And this one came when? After it tapped again. So see, when it came and tapped, that's right here. And then from there, price passed through this. And your stop loss would have been under that low. Call it right here. Your stop loss would have been under here, which doesn't get tapped, right? But obviously you're gonna leave yourself some space. Some people might use the low, some people might use a previous low right here. Me, I like to put it under the candle low, whichever one it is that created the plot. That would have been it. I would have been so close to losing that trade. And then on MetaTrader, that probably would have been a bigger gap right here, naturally, because that's just how the candles are. And then guess what? Break even at 1-to-1 right here. Break even. Boom, 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 boom. Stop loss under here. Comes up. Stop loss under here because it comes up. Stop loss under here. I would have taken my first partial right here, actually. And because it's so little, I wouldn't have taken that. So I'd have waited until I saw it go up some more. Stop loss would have been under here. Passes that. Stop loss goes right here. So I would have taken my first partial right here at 3.65. Divide that by 2, whatever that is, 1.8 something. I have no idea. 1.8 something. And then from there again, I leave the daily to run. And guess what happens with this one? So this is the one that would have run properly. And then all I would have been doing is partial in, and this one here, even up to now, to live price. This just would have been this 1 to 35 in max potential, but obviously since partials, divide that by 2, it would have been what, 15, 16, 17 something, 17.5 something, whatever. And this is the weekly right now, and the weekly haven't even come back and tapped yet. So this is where we would have wanted to initially start to look for trades. And then now, instead of looking for trades in here. So right now is not necessarily the best time to look for trades in gold. But you do know that obviously gold is bullish. So your daily taps like this now, your daily taps. And then you go into your hourly and look for continuation trades. See down here, tops right here. So down here, tops. You could have looked to get in right here, but you wouldn't have taken this one again. So save yourself. You wouldn't have gotten into this one because the MA didn't cross. So you just would have been chilling. And then now guess what? You wait. Your first tap, your first plot, which is why it's good to know, because you have flaws in all systems, right? This one here should have plotted one right here, which we would have taken that right here. I definitely would have taken this break even at 1-to-1, so that would have been a break even already. Then it came up, crossed that, so my partial would have been right here. Then it came up and crossed that, my partial would have been right here, which means I would have gotten stopped out right there. And because it's so little, I probably wouldn't have do anything. So then they would have came back and stopped me out at break even. So total max potential 2.3. And that's just how you do this thing. See this bullish plot right here? Even if it crossed, you probably wouldn't have, because guess what? You're under this fast MA. So now again, you're waiting on it to look similar for all of your trades. You want it to look very similar for all of your trades. All right. So you want your two MAs. So if I just do this, yeah. Building confluences. You want your two MAs to be doing something like this. Oh my bad. You want your two MAs, so two of them to come down like that, and then I'll start juggling around, and you want to see it push up and then go. This next one might be doing something like this, which is the fast one. Boom. But then pushes up and then goes. And what you're looking for is for price to actually be doing some stuff like this and that and this and that. Oh, sorry, hold on. Let me actually do it like this, because this is how price would have been moving faster. Alright, so this is how price would have been moving. And then you'd want like to see that push of price coming up, price coming back down, leaving that liquidity target top right here, to then push up, right, as you can see. And then price maybe top right here, maybe top this one, maybe top even lower, and then keep pushing up, and then push and push and push and push, to then come back out and do the same thing over and over again. And you'd say to you, oh well, I mean, look at it right here. I didn't even look over here on this, I swear to God. But this is how price looks all the time. And you want your MAs to kind of look like this. They're not gonna look like exactly that, but yeah, pretty much. Anyways, hopefully you found some value in this video here. Take your time and test it. If you want access to the indicator, obviously you're gonna join the Discord. When you join the Discord, now you get access to PRIMORA, which is this. You can take the plots and then easily just get in. You don't have to overthink anything. Or I have my other indicator here, which is Innovate, which gets you into trades super early as well. But so you have options to change all of these, your inputs for your London session if you want, New York sessions, and this is for Innovate. For PRIMORA, it's all the same. You can modify it as you please, change your colors and do whatever. You can change these, you know what I mean? And look on this. So no, not that. Innovate gets you into trades even way faster, like down in here, versus PRIMORA. Let me see, PRIMORA. So the MAs that I use, and I'm not gonna keep it a secret, the MAs that I using is the 12 and then the 50. All right, 12 and 50 SMMAs. So you can use both of them and just do exactly what I just told you. But obviously, if you have the indicator, it just makes it way easier for you. So as you can see, Innovate would have made you got into this one right here. Let's just hide PRIMORA. Innovate would have made you get into this one right here as a bullish trend. And then now you would have failed this one. And then this one would have gotten you into a crazy quick entry, right? That one right there. That's just max potential of this one so far. Went up to 1 to 31. Right, and I think this continues, or no, that's where live price is right now. That's that. And then from here, PRIMORA, because it's operating on a 50, this one here is Innovate is operating, I won't tell you that one. Innovate is operating on a very quicker one, and PRIMORA is on the 50. So this one right here would have given you this, and more than likely you wouldn't have gotten into this because this one here didn't cross as yet. So Innovate does get you into ones quicker, but as well as get you into possible ones that will stop you out earlier too. The quicker you get into a trend, the more likely you will get stopped out. That's just the reason why even with these, you don't even get, this is the reason why PRIMORA is better, because with these ones here that would have activated for Innovate, let me see. Oh no, so you wouldn't have been in on this one. You'd have been in on this one on Innovate, and then that one would have failed. But on PRIMORA, you wouldn't have been on any of these, which is great because now you save yourself. All right, So, but this one here, if you want it to be subjective, if you see the tendencies that you want to take this one, you definitely can. But this is more than likely the one I would have been in on, because he came back, dipped under, and this is the one I would have gotten in on. My stop loss below that candle though, myself a little bit of space, and boom. Yep. 1 to 16. This one here came down, dipped, came back up, boom. Could have taken that one as well, right? Yeah. So that's pretty much what this is. You see the MA is below that, so you wouldn't have taken any of these bullish plots. And it is below, wouldn't have taken that even if it confirmed. Boom, bam, bam. This is the first one that confirmed, and you would have gotten stocked out. Great. And then it continues. Then this is the next one that doesn't confirm, so you're saving yourself a lot. You see. Anyways, hopefully you enjoyed this video. Pick up on yourself. Peace.